Question number 1. What is an auditor's responsibility for required supplementary information that is presented outside the basic financial statements? Letter A. The auditor has no responsibility for this information at all. Letter B. The auditor need only determine whether the information has been omitted, without applying any procedures to it. Letter C. The auditor applies limited procedures to the information and reports on deficiencies in it or its omission. Letter D. The auditor performs the same detailed tests of details used on the basic financial statements. Correct answer is letter C. Explanation. Letter C is correct because required supplementary information gets a lighter touch than the basic financial statements. The auditor applies limited procedures, and if there are deficiencies or the information is missing entirely, that gets reported. Full detailed testing isn't required, but simply ignoring the information isn't allowed either. Question number 2. A client distributes a restricted use report more broadly than intended. What is the auditor's responsibility for controlling that distribution? Letter A. The auditor must formally instruct the client to stop such distribution. Letter B. The auditor must confirm the distribution's legality before allowing it to continue. Letter C. The auditor must insist that the client not duplicate the report further. Letter D. The auditor is not responsible for the client's distribution of the report. Correct answer is letter D. Explanation. Letter D is correct because once the report leaves the auditor's hands, controlling who the client shares it with isn't the auditor's job. The auditor can note that the report is meant for restricted use, but policing what the client actually does with it afterward falls outside the auditor's responsibility. Question number 3. Audited financial statements are presented in a document that also contains other, unaudited information. What is the auditor's responsibility regarding that other information? Letter A. Perform inquiry and analytical procedures on the other information. Letter B. Add an emphasis of matter paragraph addressing the other information, regardless of its content. Letter C. Perform substantive testing procedures on the other information. Letter D. Read it to check consistency with the audited financial statements. Correct answer is letter D. Explanation. Letter D is correct because the auditor's duty here is simply to read the other information and confirm it doesn't contradict or misrepresent what the audited financial statements actually say. That falls well short of applying inquiry, analytics, or substantive testing procedures, which are reserved for the financial statements themselves. Question number 4. Which of the following reports is least likely to be a restricted use report? Letter A. A report on significant deficiencies in internal control. Letter B. A report to those charged with governance, an audit committee. Letter C. A report on statements prepared under a non-GAAP framework. Letter D. A report on compliance with requirements of a specific program. Correct answer is letter C. Explanation. Letter C is correct because reports on financial statements prepared using a framework other than GAAP are generally meant for broader use, not restricted to a narrow set of specified parties. Reports on control deficiencies, to an audit committee, or on compliance with a specific program are all restricted, since they're built around a narrow, specific purpose or audience. Question number 5. Management declines to present supplementary information that is required by the Governmental Accounting Standards Board. What is the proper audit report? Letter A. An adverse opinion, since required information was omitted. Letter B. A qualified opinion, since required information was omitted. Letter C. An unmodified opinion, with no further comment needed. Letter D. An unmodified opinion, with an other matter paragraph. Correct answer is letter D. Explanation. Letter D is correct because this required supplementary information isn't actually audited, so its omission doesn't taint the opinion on the audited financial statements themselves. The auditor still needs to flag the omission, though, which is exactly what the added other matter paragraph does. Question number 6. An auditor provides an opinion on information accompanying the basic financial statements. Which statement correctly describes what that report indicates? Letter A. That the accompanying information was prepared in accordance with generally accepted auditing standards. Letter B, that the accompanying information satisfies requirements beyond generally accepted accounting principles. Letter C, whether the accompanying information is fairly stated relative to the basic statements as a whole. Letter D, that the accompanying information complies with attestation standards. Correct answer is letter C. Explanation. Letter C is correct because the whole point of this kind of opinion is to tie the accompanying information back to the basic financial statements, saying whether it's fairly stated in relation to those statements taken as a whole. It's not a statement about auditing standards, GAAP, or attestation standards applying to the extra information itself. Question number 7. An auditor identifies a material inconsistency between the audited financial statements and other information included in the same annual report to shareholders, and the client refuses to revise the other information. What is the auditor's reporting responsibility? Letter A, include an emphasis of matter paragraph explaining the inconsistency. Letter B, restate the financial statements to eliminate the inconsistency. Letter C, decline to read the other information going forward. Letter D, issue a disclaimer of opinion, since the financial statements are misstated. Correct answer is letter A. Explanation. Letter A is correct because the financial statements themselves aren't the problem here, it's the other information that doesn't line up with them. So the fix is an emphasis of matter paragraph explaining the inconsistency, not restating statements that are already correct or disclaiming an opinion that isn't warranted. Question number 8. Prior period financial statements received a qualified opinion due to inadequate disclosure. Those statements have since been restated to correct the disclosure deficiency. What is the auditor's reporting responsibility? Letter A, reissue the original qualified report unchanged. Letter B, continue to express the same qualified opinion, since the original report already covered that period. Letter C, omit any reference to the type of opinion originally expressed. Letter D, express an unmodified opinion on the restated statements, with an emphasis of matter paragraph. Correct answer is letter D. Explanation. Letter D is correct because once the disclosure problem that caused the original qualification has actually been fixed, the auditor's opinion should reflect that improvement rather than clinging to the old qualified opinion. An added emphasis of matter paragraph lets the auditor explain the history without leaving the reader in the dark about what changed. Question number 9. An auditor has disclaimed an opinion on an entity's overall financial statements. In what manner may the auditor still express an opinion on the entity's accounts receivable specifically? Letter A, by stating the specific reason for the overall disclaimer within that same report. Letter B, by restricting distribution of the report to internal management use only. Letter C, by also reporting separately on the current asset portion of the balance sheet. Letter D, by issuing a separate report on accounts receivable, apart from the disclaimer. Correct answer is letter D. Explanation. Letter D is correct because expressing an opinion on one specific account, like accounts receivable, has to happen in its own separate report, entirely apart from the disclaimer on the overall financial statements. Bundling the two together in one report would create exactly the kind of piecemeal opinion confusion that standards are designed to avoid. Question number 10. Which type of report is most likely to include an alert restricting its use to specified users? Letter A, a standard unmodified audit report. Letter B, a review engagement report. Letter C, a standalone compilation report. Letter D, an agreed upon procedures report. Correct answer is letter D. Explanation. Letter D is correct because agreed upon procedures reports are always restricted to the specific parties who agreed on those procedures in the first place, since the whole engagement is built around their particular needs. Standard audit, review, and compilation reports can sometimes be restricted too, but there's no requirement that they be.